Hey, this is Warren Redlick with highlights from the Tesla Q4 investor call. A lot of information to get to. I want to start with highlights. The first highlight. Are you ready? Let's go. The first highlight is that I was wrong about a lot. I was wrong about Cybertruck. There were a lot of hints dropped ahead of this earnings call that something was happening with Cybertruck. There were pictures revealed of Cybertruck at Giga Texas. Elon tweeted about driving around the prototype, and that was awesome. So a lot of us thought this meant that Cybertruck was going to be moved up. No, Cybertruck is on hold until 2023. Semi is on hold until 2023. Roadster is on hold until 2023. And the big surprise we'll be talking about later is Tesla Bot is on hold till 2023, which means Tesla Bot will be going into production in 2023, which is crazy. This is spectacular news. I'm going to talk in depth about that later in this video. Another big thing I got wrong is I thought we were going to hear more about the battery day vehicle. Elon said he was going to talk about the product roadmap. The product roadmap right now appears to be, hey, a lot of that stuff's down the road. They're not even working on the battery day vehicle. The vision I had for the battery day vehicle is it's a much more efficient robotaxi. It costs less per mile in a significant way. And that's not going to happen. I'm going to go in depth and explain why that's not going to happen. Model Y 4680 is coming soon. The Model Y 4680 structural pack coming from Giga Texas is coming soon, but it wasn't ready yet. Wasn't quite as wrong on that. Drew Beglino said it'll be delivered first quarter, which is in the next 2 months. So they're clearly making progress on that, but you can't order it yet. And I thought there was a chance they were going to tell us more about residential HVAC, heating, ventilation, air conditioning, that they were going to take the heat pump from the Model Y and they were going to come up with an application for homes. It's something they'd like to do. It's very clearly not in the near-term product roadmap, something they might do down the road, way down the road, and they invited other people to do it. So we're not going to see residential HVAC. So I got those things wrong. I was a little conservative on my earnings estimate, which is fine. Earnings came in higher than I thought they would. It was higher than Wall Street. It was a beat. I doubt Wall Street's going to react positively. We'll see how it goes today, but Wall Street doesn't understand. There was really big news that's coming that I'm going to talk about that shows why Tesla is easily going to 10x as a stock and maybe even 100x as a stock. This is the just absolutely crazy potential valuation for Tesla when you dive into what they got with Robotaxi and with Bot. And I'm going to talk about that, but let's go into first. I've got a total list of about 10 highlights. The first highlight was what I got wrong. Let's go into what's happening, what's coming. That's really exciting. So the first highlight that I have, other than my being wrong, was that Model Y 4680 with structural pack will be coming out of Giga Texas this quarter. That's great news. Part of that story is that they are not cell constrained. They have been chip constrained last year, the parts constrained, supply chain constrained, and in particular computer chips, and even like weird little things like the chip that moves the seat forward and backwards was unavailable. All these quirky things, but they are not cell constrained. They have enough battery cells to produce what they want to produce. It's just a matter of getting enough chips. They expect to be chip constrained this year as well. There are a lot of chip fabs being built, so the chip constraint will be gone in 2023, and they may start looking at being constrained by battery cells then, which will be great because it means they're producing so many vehicles and so much energy storage that they're able to use all the batteries that are coming. There's a lot of batteries coming. As a part of the discussion of battery cells, we learned that lithium iron phosphate or iron-based cells will not be made, at least not anytime soon, in the 4680 cell format. There was some discussion that it's not really a fit. The form factor isn't really a fit for that chemistry. The physics involved, the chemistry involved doesn't really make sense. There may be other form factors for lithium iron phosphate. They didn't go in depth on that. Currently, lithium iron phosphate is mostly shipped in a prismatic form. It's kind of like a rectangular box, and they fit together very nicely, and there may be a way of making a structural pack with that I'm not aware of. Maybe the pack formation for that works really well. I'm not sure how they're doing that, but a lot of people, including me, who thought we might see lithium iron phosphate in 4680, apparently not happening. Another detail about lithium iron phosphate is apparently they're tinkering with using manganese in making lithium iron phosphate cells, and that may make lithium iron phosphate cells significantly more energy dense, which would allow for longer range and better performance out of a lithium iron phosphate Model 3 or Model Y. So that may be coming, probably not this year, but next year we may be seeing that. I don't know where they are in the chemistry. I'm hoping Limiting Factor channel, Jordan Gieske of the Limiting Factor will address that sometime in the near future. The next highlight was volume growth. They're expecting significantly more than 50% growth this year. And as I heard Zach Kirkhorn say it, they're expecting significantly more than 50% growth just from Fremont and Shanghai. So with 936,000 vehicles produced in 2021, that would be at least 1.4 million out of those two factories in 2022. And then you add Giga Texas and Giga Berlin to that. More than 50% growth would push you towards 1.5 million for Shanghai and Fremont. And then you only need 500,000 from Giga Berlin and Giga Texas to get to 2 million. I still think there's a chance that they make 2 million vehicles in 2022. 1.8 million is probably a more reasonable forecast, and that would be spectacular. That would be nearly 100% growth for the company as a whole in vehicle deliveries. They also mentioned they're expecting 50% growth in Tesla Energy. That means that Tesla Energy will actually decrease as a share of the company revenue if vehicles are growing more than 50%. Zach Kirkhorn, the master of coin or CFO of Tesla, said that they expect Tesla insurance to be available to 80% of Tesla's customers in the United States by the end of the year. That is a significant increase in availability of Tesla insurance. I have a Tesla Model 3. I want Tesla insurance. They're seeing a lot of great things with Tesla insurance, that they're seeing the feedback loop of providing telematics information to the driver, telling him he can lower his insurance rates if he drives differently in this way. Greatly reduces the number of losses and greatly reduces the insurance cost to the driver. Tesla makes money on the insurance. The driver saves money on insurance. It's a great win-win for everybody. Pierre Ferragu has talked about this before. There's a lot of potential for this to feedback and make Tesla an even stronger company. People keep asking me, where's the next Gigafactory going to be? They're very clear that they're going to be looking at factory locations this year. It's possible they will have an announcement this year of a next factory location. My guess, the top location that makes sense to me is Giga Osaka. We'll see. I'm wrong about a lot of things, but it makes the most sense to me. The four largest car markets in the world are China, North America, Europe, and then Japan is number 4, and it's a big drop off to number 5 after Japan. So Japan makes a lot of sense because Panasonic supplies batteries to Tesla. They're making 4680 cells with Panasonic in Osaka. Hiromichi Mizuno, the Tesla board member, is from Osaka and is deeply connected in the Japanese financial and political community. Really makes sense for Tesla to build a factory at Osaka, deliver vehicles. Osaka is also kind of centrally located between the big population center of Tokyo, the big population center in Osaka, and then population centers to the south in Japan, Hiroshima and Fukuoka. A lot of great reasons why Osaka would make sense. I don't see another location that makes more sense other than more factory locations in China and in Europe. My hunch is with all the slowdowns at Giga Berlin that Tesla's unlikely to build another factory in Germany, so maybe Eastern Europe. I would think Ireland, but Ireland just doesn't seem like an ideal location because it's so far from everything else in Europe. Maybe we'll see a European Gigafactory, maybe we'll see a Gigafactory in Osaka, and maybe we'll see a factory on the East Coast of the United States, but I don't think so because they specifically talked about delivering vehicles from Texas to the East Coast of the United States. So I don't think there's a lot of gain in building another factory on the East Coast of the United States. They're just going to scale up Austin. There's lots of room to build more factory in Austin. So another factory somewhere in China, maybe somewhere significantly distant from Shanghai so they can serve other parts of China. It is the biggest car market in the world, so China makes a lot of sense. And then somewhere in Europe. In terms of the stock analysis stuff, Zach Kirkhorn talked about margin pressures in Q1 and Q2, that as Giga Texas and Giga Berlin come online, those initial vehicles coming out of those factories are going to be relatively low margin. I don't think that's a huge impact, but it's some impact. And then the cost of absorbing accounting for those factories is going to affect margins. My impression from what they're saying is that margins will be flat. I don't think they're going to drop very much, but they're not going to go up very much in Q1 and Q2. Probably see significant increases in margin in Q3 and Q4 as Giga Texas and Giga Berlin scale their production, as Shanghai continues to grow its production, and as Fremont grows production. All of those factors, as the mix shifts to more Model Ys and maybe somewhat of an increase in Model S and Model X, we should see a lot of potential there. The two biggest highlights I'm going to talk about next, shaping the business of Tesla around full self-driving and real-world artificial intelligence. The vehicle business is very clearly being shaped around FSD. The reason that they're not going to make these other vehicles, they're not going to make Cybertruck, they're not going to make Semi, they're not going to make Roadster yet, they're not going to make the battery day vehicle yet, is because they simply don't have enough chips and batteries to add to new vehicles without cutting into the vehicles they're already making. They are seeing tremendous growth in their ability to produce Model Y and Model 3 and Giga Shanghai and Giga Fremont, and they're going to see more of that in Giga Texas and Giga Berlin. If they started making Cybertrucks and they made 100,000 Cybertrucks, that might mean they make 200,000 less Model Ys. And because they see, Elon was very clear that he sees FSD, full self-driving, going into wide release by the end of this year. FSD beta is now in 60,000 cars, which is way more than I thought. I thought they were around 12,000. They're in 60,000 cars already. That's a pretty big group of cars, and that means they're generating a lot more data. The GPU cluster that is used to process the data from the cars and retrain the system to drive better, that is improving. Dojo is coming. Elon is seeing where he thinks that self-driving will be better than human, safer than human, better than human before the end of this year. There are internal measures of how FSD is working that the average FSD beta driver just can't see. It's better at predicting how this pedestrian might move, or these pedestrians, or these bicycles. It's better at predicting objects. It's better at recognizing objects. All those things are improving bit by bit here and there. When you iterate that, and you do it 10 times over the next 10 months, you're going to see radical improvements in how FSD operates. It just, you don't see it from one step to the other. If they're going to go in wide release in FSD by the end of this year, that's a big change in valuation, and more people might decide. There was this question in the earnings call, I'll talk about it later, this question in the earnings call, what's the take rate for FSD now, and how do we project in the future FSD take rate? And Elon's basically saying this is a game changer. You can't look at the past and predict the future. It's like saying, well, how many flip phones did you sell, versus using that to predict how many iPhones you're going to sell. The iPhone was a total game changer of a product. Smartphones are a total game changer of a product. It's basically just a completely different market than the flip phone market. Same thing for robotaxis. When you start delivering robotaxis, the value just goes crazy, and you're going to see a lot more demand for that. That's how I read that. And then probably the biggest bomb of all was that Bot is going to be produced in 2023. I did not expect that. I thought Bot was like a science project. You know, they're just goofing around. Let's see what we can do here, and maybe we'll make something in 2025 or 2026. No, they're talking about going into production in 2023. That the real-world AI development that FSD represents is going to be useful in Bot in 2023. Initial use, maybe moving parts around Tesla factories. I see it going on Tesla roofs, you know, installing solar panels and solar roof tiles on Tesla solar installations, because it's dangerous, repetitive, and boring. And that's one of the things that Elon stressed when he talked about Tesla Bot. Moving parts around a factory might be repetitive and boring, but I don't think they're dangerous. So the real value of Bot is doing dangerous work that saves human lives, and also doing work at lower cost, high volume. So those are the highlights. Now I want to go through my notes and tell you what else I saw, or provide a little more depth. So at the very beginning, Zach Kirkhorn said they expect Tesla's growth to be comfortably above 50% in 2022. Comfortably above 50%. So 50% growth from 2022 would mean adding 470,000 vehicles, which would be about 1.4 million vehicles total produced. So they expect to do way more than 1.4 million vehicles. I think from what I heard, they're expecting 1.5 million out of Shanghai and Fremont, and then an unknown number out of Texas and Berlin. But if Texas is going to start delivering vehicles in Q1, and I think Berlin may start delivering a few vehicles in Q1, as they scale, as they ramp, if the ramp goes well, we could easily see 1.8 million vehicles for the year and maybe 2 million vehicles for the year. That is a radical increase in production. And then, if I'm correct that the Model Ys coming out of Giga Texas will be a high-priced, high-performance version, that will increase revenue even more. That will increase margins even more. If they're able to scale Model S and Model X, that's going to increase margins even more. As Shanghai grows, Shanghai is a high margin. They cost them less to make the vehicles, and they're still able to sell them for a high valuation, a high price. That's going to increase margins. So we're going to see not only substantial growth in revenue, but substantial growth in profit. Profit probably growing faster than revenue. So if revenue grows, if deliveries grow more than 50%, revenue might grow 60 or 70%, and profit might grow 80 to 100%. This is very, very fast growth, and leads to a very, very high valuation of a company. And that's without Robotaxi, and that's without Bot. If you add Robotaxi in this year, or FSD take rate going up when FSD goes into wide release, if you add that in this year, then you're talking about an even more substantial increase in value. Elon talked about the product roadmap. He said they're going to be scaling output. That's it. Scaling output, increasing production from the factories they have now. Don't expect to see new factories this year. Expect them to continue to maximize what they can produce out of the factories they have this year. We will not be seeing new vehicles in 2022. Elon said very directly that would reduce output. If they put a lot of engineering resources into building out the Cybertruck line and producing Cybertruck, and they produced 50,000 Cybertrucks, they might lose 100,000 Model Ys in the process. Number one, Cybertruck probably uses more batteries than Model Y, but it also, the process of making a new vehicle, you're slow in your production of that vehicle. So you want to get to the point where you're towards the end of the S curve on the factories you have when you start ramping the new factories. I think that's probably where they're going. So we're going to see significant growth through 2022 in the vehicles they have, and from the factories that they have and that we know about, and then late in 2022, we may hear about new factory locations. We may hear about new product lines. I think Cybertruck will be built in Giga Texas, so that won't require a new factory. Semi already has a location for building Semi, but they're just not building it yet. That was another hint, by the way. Sawyer Merritt had a drone flyover of the Tesla Semi factory in Nevada, and I thought that was a hint that we were going to see Tesla Semis produced this year, but Tesla Semi also pushed off to 2023. To be clear, Cybertruck, Semi, Roadster, and Optimus, or Tesla Bot, will be put off until next year. But they're going to be producing Optimus next year. Well, Elon said that he expects Bot, Tesla Optimus, the humanoid robot, to be bigger than vehicles over time. The potential for this to be a massive game changer for humanity, for society, for the world, for the economy, for the solar system is huge. It's basically going to change the entire labor market over time. Not immediately. Immediately, it addresses some small work issues. There's a lot of work that needs to be done that there's a shortage of human labor for, that maybe Tesla Bot can take that over. Tesla Bot can may be able to handle a lot of routine, boring, repetitive, and maybe dangerous tasks, taking that work off human hands, freeing up humans to do more high value added work, or work that is less dangerous. So I think we're going to start to see some of that in 2023. Probably very late in 2023, we'll see bots in use in Tesla factories, just moving parts around. But we're going to see Tesla Bot become significant in 2024, if not late 2023. And we'll get the hint of where it's going in 2023. Drew Baglino talked about the 4680 cells. Cells overall, battery cells all from other suppliers, are greater than their other constraints. So they are not cell constrained. Batteries are not a limiting factor right now for Tesla. There are other limiting factors, particularly chips. The chip fabs are growing, so that's going to end that problem. The Cato ramp was meaningful. They're producing significant quantities of 4680 batteries in the Cato Road location at Tesla Fremont. There's a building at Tesla Fremont called the Cato Road building where they're building 4680 cells. That is one of the largest battery factories in the world, and it is producing a meaningful amount of batteries. And the first 4680 vehicles will be coming out of Giga Texas this quarter. We're at the end of January now. That means sometime within the next 2 months, we're going to see those vehicles. But we can't order them yet. I think there's this interesting question. Will there be an order button? Will there be an order button to order a Giga Texas Model Y? Or will people who are waiting on Model Ys get preference for access to those? And rather than putting an order button for that vehicle, maybe they're just going to offer it to people who are waiting on performance or long-range Model Y, saying, hey, if you want to get a Y quicker, we're going to have these available, and it's going to have these extra features. And so maybe it'll be just people who already have Ys on order that are going to get them. But I'm hoping we're going to see an order button and I'll be able to jump on it. They are chip limited this year. They expect to be battery constrained next year. So this year, until the chip fabs that are being built come online, they are going to continue to face limitations on their ability to produce vehicles based on how many chips are available. Next year, they expect to be battery constrained. Given the volume of batteries that are being produced and going to be produced next year, this means they're expecting really, really big production of vehicles and maybe energy in 2023. That's how Zach Kirkhorn, talking about this year, said margins have been trending up. I think he's saying that margins will flatten as they go into 2022 because of what we talked about before. Regulatory credits, this is a popular target of the Tesla Q, Tesla haters, Elon haters. Regulatory credits increased slightly in Q4, but they are declining as a share of the business, and they expect that decline to continue because the business is growing so fast, and regulatory credits are basically flat. Regulatory credits are when some country has a regulation that you have to offset your gasoline vehicle with a zero emission vehicle. those companies pay Tesla for the credits that are generated by the Tesla zero-emission vehicles. As Tesla produces more vehicles, they may be able to get more zero-emission vehicle credits, but it's just not that significant a share of the business compared to how much profit they're making selling cars. In 2022, they expect volume growth greater than 50%, and that's just from Fremont and Shanghai. So if that's correct, we're going to see significantly more than 1.5 million vehicles in 2022, which would be stunning. I think we might see 1.8 million, and 22 million is a stretch, but it's possible. Oh, there was a question about 4680 cells, and that was already answered by what Drew Beglino said. There's a question about the battery day vehicle. They're not currently working on the $25,000 car. These are retail investor questions. They're not currently working on the $25,000 car. So they're not even trying to develop that vehicle. They don't even have people working on how to make this. And I think the key detail here is the innovation of self-driving cars and robotaxis is such a profound change in the costs of transportation that if you are planning to go from point A to point B, once you have self-driving cars, the cost of making that trip falls so much. The value creation of flicking that switch to full self-driving going on in a Model Y is such a game changer for the existing car market that the added value of having a lower cost vehicle like the battery day vehicle is not that significant. And especially when you're chip constrained and cell constrained and you've got your production going on these vehicles, it doesn't add that much value. Basically 80% of the world's transportation market is people getting from point A to point B. And if you're going to lower that cost by half or 75%, then the additional gain of lowering it another 5 or 10% with the battery day vehicle is not big enough to justify the fact that you're cutting into Model Y and Model 3 production in order to get there. So the battery day vehicle just isn't that important. They'll get there when they get there, and don't expect it till 2024 or later. There was a question about domestic cooling and heating, as in residential heating, ventilation, air conditioning. Drew said it is aligned with the company mission. It is the next logical step to go along with Powerwall and Tesla Solar, but they're not doing it yet, and there's no time frame for doing it. So again, residential HVAC using the heat pump from Model Y or something similar to that, it's just not a priority. It's not something they're going to get to anytime soon. Value creation of full self-driving and robotaxi is so great that they want to produce as many vehicles as possible to take advantage of the transition to robotaxi, and Model Y and Model 3 are the way to get there for now. Ultimately, when they're not cell constrained, when they're not chip constrained, then they'll be able to produce other vehicles and other things for other markets. The chip constraint is actually constraining energy as well, so it would constrain HVAC as well. So there's just no point in pursuing those things when you're trying to grow the one thing that's going to drive more value for Tesla in the medium term. Question about whether FSD would be delivered in a perpetual or some sort of, sold to customers in different ways. And it was just like, are you going to sell it like a commercial version and a private version or whatever? And Elon just said that's too complicated. Their goal is the lowest cost per mile or kilometer driven. They're striving for maximum efficiency, and playing games with how they price FSD for different customers is not the goal. People ask me about all the time or suggest that all the time. Well, they'll make a version for commercial robotaxi and they'll make a version for people at home. No, they're going for lowest cost per mile. I think they're all going to be commercial use. I think they're going to stop. They're basically going to effectively stop making Model Y and Model 3 for private use, or you're going to have to pay a lot more for the vehicle in order to get it, because the value driven by having it serve as a robotaxi is so much higher than the value of it sitting in your garage doing nothing. People hate when I say that. You want to have your self-driving car and have it sit in your garage 20 hours a day or 22 hours a day. You're not accelerating the transition to sustainable energy, and you're not improving the economy by lowering the cost of transportation by having this high-value vehicle sitting in your garage. It can deliver much more value to society and make much more revenue and profit for Tesla and make Tesla shareholders a lot wealthier if you put them in robotaxi use. That's my take on it. Maybe I'm wrong, but that's what I'm hearing. And if you own a Tesla that is capable of this, the incentives to put it into the robotaxi network are going to be so high that you're probably going to do it. There was a question about whether Dojo would become active in summer of 2022. Elon kind of waffled on that. He said he thinks Dojo may be useful by summer. He said the GPU cluster that Dojo will eventually replace, if all goes well, is improving. The GPU cluster, graphical processing unit cluster, the thing that they are using to process data from the vehicles now and retrain the AI to drive the cars better now, is improving. So it's not like it's a static target, it's a moving target. Dojo has to get better than that. Elon said he's not 100% certain that will be successful. I think he thinks it's very likely to be successful. Elon said that Dojo is not needed for FSD. What that means is in the internal measures they're looking at how FSD is improving with the current system, with the GPU cluster, with all the data they're generating, it will be better than human before Dojo comes online. And Dojo will help it take it from, double, twice as safe as human, 3 times as safe as human, to 10 or 100 times safer than human. But they will be safer than human and significantly safer than human without Dojo, and then Dojo just makes it that much better. And Dojo is also useful for other AI training like Tesla Bot, and maybe to help other companies do whatever AI training they need. There was a question about what the first use of Tesla Bot would be. Elon seemed like he didn't really want to answer that question. The question was, would you use Tesla Bot in the factory? And Elon said, well, maybe we'll use it for moving parts around the factory. The reality is that the factory uses robots that are very, very special purpose, and the work that humans do in the factory is very specifically working with those robots primarily. So I don't think there's a lot of gain. People think that we're going to see Tesla bots on the manufacturing line. Elon was pretty clear, no, maybe we'll use them to move parts around the factory. I think they see other uses for Tesla bot that are going to be more significant in the future. Like I said, installing roof tiles and solar panels on roofs to save humans from the dangerous work of going up on roofs. That makes sense. Zach Kirkhorn went in some depth on Tesla insurance, that they are selling Tesla insurance in 5 states now, including California. The 4 other states are using telematics to provide feedback to drivers and to change pricing for the insurance. California so far is not allowing it. They are pushing California hard to let them use that. They have evidence from Texas that it makes cars safer. It makes driving safer. It makes the roads safer. If you allow this telematics data to feed back to the driver, adjusting the price of insurance, giving the driver an incentive to drive safer, and teaching the driver how to drive safer, that they're seeing this work. The take rates are good. That means people who have access to Tesla insurance and have a choice of getting it are choosing it. Not necessarily everyone, but they're seeing good numbers on that. And they're also seeing good loss ratios, which means when they sell that insurance to a driver, they sell that insurance to the driver for obviously less than the driver was paying otherwise. And the loss ratio, which means the cost in terms of claims generated by these vehicles, is good. They're not paying out that much in claims because the drivers are driving safer. The driver pays less for car insurance, the Tesla owner pays less for car insurance, and Tesla makes money on the insurance because the cars are being driven safer. There's fewer losses, there's fewer claims, so the insurance has to pay out less in damage. Their end-of-year goal is to make Tesla insurance available to 80% of customers who in the United States. So 80% of customers will have the option of choosing it. It's a state-by-state thing. The way I read that, they're going to go to the largest states first and then worry about the smallest states later. Because the regulatory process is burdensome, and the small states are probably just as burdensome as the big states, you get access to more customers by flipping Florida than you do by flipping New Hampshire. You figure they're going to target Florida, they're going to target New York, they're going to target Pennsylvania, other large states, Georgia. But those are, maybe they're already in Georgia. They're going to target states that are larger states first, so they can get it to more customers quickly. And then once they've reached like 80% of customers in the United States, and they've got great data showing how valuable this insurance product is, then they can try to approach Europe and see if they can get Tesla insurance operating in Europe. They did not mention China, so maybe they're not planning on doing Tesla insurance in China. As they start to reach maximum capacity from the factories they have, I think particularly Fremont and Shanghai may be starting to push their limits by the end of this year. They will be looking at factory locations this year, potentially open factories next year. They didn't mention any locations. I believe Giga Osaka is going to happen. We'll see. As far as Cybertruck goes, I think I heard this wrong. I thought I heard them say that they were ultimately targeting making 1 million Cybertrucks a year. Other people who heard the same thing heard 250,000 a year. I don't think it makes sense to only make 1 million Cybertrucks a year. I think Cybertruck very clearly has a market of 1 million or more a year. It's, Ford F-150 sells 1 million a year. Why wouldn't you be able to sell 1 million Cybertrucks a year? The Chevy Silverado, whatever, the Chevy 1500, GM 1500 trucks, the Dodge trucks all sell about 1 million a year. Plenty of room for Tesla to sell 1 million a year of Cybertruck. I'd be surprised if they only did 250 million a year. Plus, there's this huge order backlog, which means if you're waiting on a Cybertruck, you're going to be waiting a while. It may just be that the battery supply and chip supply won't be there for more Cybertrucks in 2023. But I would hope that they're eventually going for 1 million Cybertrucks a year or more. If I heard it right, I'm right. If I heard it wrong, which other people say I heard it wrong, then they're not building enough Cybertrucks for what I think they need to build. But I got my order in early, so I'll be in the first 200. I'll be in the first 10 or 20,000, I think. Going in depth on margins, Zach Kirkhorn talked about the mix of Model Y versus Model 3. As the mix changes from heavy Model 3 to minimal Model Y being half of the vehicles sold or more, because Model Y makes higher profits than Model 3, the shifting to more Model Ys means higher margins for the vehicles as a whole, for the company as a whole. Localization in Shanghai is helping margins. He did this 4-point thing on margins. Localization in Shanghai, as more parts are produced in Shanghai for their vehicles, as other support, everything going on, as Shanghai becomes its own manufacturing megalopolis, then that cost structure in Shanghai goes down and the margins increase from Shanghai. Shanghai is already very high margin, very profitable factory. So as Shanghai increases importance and as Shanghai improves its efficiency, then you're going to see even better profits out of Shanghai. And so margins go up from that. Zach mentioned that because Model X and Model X ramped somewhat, we saw some increase in margins there. I don't think Model S and Model X will be that significant a part of the business going forward because Model Y is so huge and Model 3 is pretty big that even though that they are more profitable vehicles, the volumes aren't there. It'd be interesting to see, are they expecting to significantly increase volumes of Model S and Model X? That question wasn't asked. It sounds like they expect to continue ramping Model S and Model X, but when you're still chip constrained, maybe that's not the most important vehicle to deliver. I'm waiting on a Plaid Model X for April. The fact that Cybertruck is not coming soon means I'm more likely to go forward with that Model X Plaid purchase, even though it's stupid. I will see if there's a Model Y. If there's a Model Y available coming out of Giga Texas, maybe I'll buy that, and I can get that around the same time as the Model X Plaid, then I might get that instead. I only have a $100 non-refundable deposit on Model X Plaid, so I don't mind losing that. And then price increases in terms of that margin point. As price increases, as Tesla raises prices of vehicles, they're seeing that increase margins. Even though their cost structure is going up, they're raising prices more than that it increases margins rather than decreases them. Zach said that he expects for the first half of the year that ramp inefficiencies, particularly at Giga Texas and Giga Berlin, that those are going to affect margins. So we're not going to see as large growth in margins in the early part of the year, or maybe we may even see flat or declining margins initially because of the impact of adding costs from the 2 new factories and the margin pressures from that. Also, inflation and the supply chain issues can affect margins. So my sense is that margins will be flat or slightly increasing in Q1 and Q2, but not something significant to worry about one way or the other. Zach stressed that the software portion of the business, full self-driving and Robotaxi, is a huge upside. So that will, when they go into wide release of FSD, if it's as good as Elon says it's going to be, if it's safer than human, better than human, then we may see significant upside in terms of revenue and profit, and that would dramatically increase both. In Zach's words, everything pales in comparison to full self-driving and Robotaxi. Taking a vehicle from 12, and maybe this was Elon, taking a vehicle from operating 12 hours a week to 60 hours a week, 5x is the value of that vehicle. If Tesla only doubles the price of the vehicle as a result of that, you're still getting massive, massive increases in revenue and profit. And how much of that gain in value will Tesla be able to capture? I don't know, but we're going to see huge, huge increases in revenue profit, probably Q3 or Q4, most likely Q4 of 2022. That's when we're going to see it. Elon tends to be over-optimistic. The one thing I always notice is Elon saying stuff and the team is muttering behind his back, there's no way we're doing that, or is the team on board? I see the team is on board. If you watched AI Day, Karpathy and Ashok and the rest of the Tesla autopilot team are on board, that they're making huge progress. If you listen to Drew Baglino's voice, if you listen to Zach Kirkhorn's voice, if you listen to what they say, they're on board with this. Zach Kirkhorn said he prefers driving FSD beta to driving himself. So the team is on board with this concept in a big way. And that makes Elon's projections more credible. Still, are they going to... I drive FSD beta and it doesn't seem that good to me, but it's like the improvements that are happening under the hood. Remember the merch on elonbits.com. There's another one. This is the Elon stainless steel water bottle. There's one with TSLA in red for Tesla stock and the Tesla Air t-shirt. If you own $100,000 in Tesla stock now and Robotaxi Network goes live, you're going to have $1 million in Tesla stock soon thereafter. So you could be a Tesla Air too. There was a question about when FSD will achieve level 4. Elon doesn't talk in terms of level 4 and level 5. He talks about safer than human. And he said safer than human is a low standard. He says there's this march of nines coming, and the more nines you try to achieve, the harder it gets. Elon said that the pace of improvement of FSD is fast, and there's a stack of improvements coming in the next few months, and he's confident it'll be safer than human this year. Again, low bar, humans aren't that safe. But the stack of improvements coming, we know version 11 is coming soon. Soon with Elon, who knows? Is it next week? Is it 2 or 3 weeks? Is it March? I don't know. But stack of improvements coming in the next few months. I think that's beyond version 11. That probably means version 12 is coming as well. It would be nice to know what the improvements are, but the technical details of that may be a stretch. I think in my own personal experience driving FSD beta, I find that there's a conflict between the navigation software, and the self-driving software. And it may be the resolution of conflicts between navigation and FSD. That's my take, and I'm not a professional. I don't know what the hell I'm talking about. I'm just driving. I'm seeing what I'm reporting what I'm seeing. I think that there may be some significant improvement to navigation or integration of navigation with FSD beta. I think the going to photon counts, I don't know if you've caught this detail, that the way it worked before was photons come into the cameras and the software translate that into a video image that human eyes can see, and then the car was processing the video images that are designed for humans. They figured out, hey, we don't need to process the photons into a video image for humans in order to be able to work on that, and that reduces latency. It means the car is able to make decisions quicker, and in version 10.9, they said they saw a 20% increase, 20% improvement in latency, which means the car is making decisions quicker. An analyst named Jet asked about Megapack and energy. Elon said that eventually all stationary storage will go to lithium iron phosphate batteries or iron-based chemistry. That's where he got into this idea of iron with manganese, incorporating manganese into the lithium iron phosphate batteries. That was an interesting detail. Long term, he said that Tesla Energy should be a terawatt-hour a year business. Not clear, he said a terawatt-hour a year. At Battery Day, they were talking about it being a 3 terawatt-hour a year business. So was that a step back from the 3 terawatt hours a year, or was it just careless choice of words? I'm not sure. The chip shortage is still a constraint that is affecting Tesla Energy. They are favoring Tesla vehicles over Tesla Energy because, especially with Robotaxi coming and the value generation that creates, it makes more sense to focus on Robotaxi and vehicles. The chip fabs are being built. They do expect Tesla Energy to grow 50% this year. That's what I heard. They have ambitious plans for this year. But, with the chip constraints, we'll see. And they do have the Megapack factory being built. So the Megapack factory will hopefully start producing Megapacks to the market, delivering Megapacks sometime this year. We'll see how that goes. There was this question about research and development and how they organize research and development. Do they have an incubator? And the team was laughing about having an incubator. The concept of having incubators where people swap ideas and talk about ideas. And they're like, no, we do our innovation on the factory floor. If we think we have an innovation that's worth pursuing, they work on building it in the factory. They're not wasting time talking about ideas in some research center or incubator. It was a good part of the conversation. More humor in that. There may have been an F word dropped in there by Lars. Tommy Saganaki, this is the question that was asked about the current attach rate of FSD and how it will affect recognition of deferred revenue in the future. And Elon poo-pooed the idea of looking at the attach rates for FSD now. What percentage of buyers are buying FSD now? Once FSD goes into wide release, that everybody who buys it gets it right away. You won't be able to use past take rates to predict how many people will buy it when it's fully available. He made this moment where he said, this is a game changer for transportation, and people are going to stop riding buses and they're going to stop riding subways because you'll be able to go 10 miles for $2 in a Tesla Robotaxi. It'll take you point to point. It's so much more convenient and so much less expensive. A New York City subway ride is like $2.75. It's very inconvenient because you got to go to a subway station. You got to go downstairs or go down a lot of stairs, come back up a lot of stairs at your destination, and then still walk to your destination. Where a Robotaxi at $2 for 10 miles is going to save you money and get you there quicker and more conveniently. But I think his $2 for 10 miles was crazy optimistic. I don't think we're going to see that in a long time. Even ARK Invest is saying 25 cents a mile. That would be 20 cents a mile. My math doesn't get them to 20 cents a mile for a while, out in 2025 or 2026. Elon also said the potential for robotaxis to increase traffic on roadways is going to be huge pressure on the roadway systems. And he mentioned the Boring Company specifically in that conversation, that Boring Company will be helping alleviate traffic. So I think he's expecting a significant expansion of Boring Company in the next few years. Wish I could get my investment in the Boring Company, but it's not available yet for private investment for retail investors to buy. Saganaki also asked about how they could achieve 3.2 million vehicles in 2024. Basically, his question sounded to me like you're only going to have 4 models in 2024. How are you going to achieve 3.2 million vehicles? Or maybe adding Cybertruck. And it was this notion that there's this paradigm that you can only sell so many of a particular model. That there's sort of a cap on how many vehicles you can sell of a particular model, which doesn't really make sense because Ford sells 1 million F-150s in the United States alone. So it's certainly potential for, without Robotaxi, to sell over 1 million Model Ys. And then, 1 million Model 3s and 1 million Cybertrucks, and you got your 3 million right there. But basically, the way I heard Elon talking, FSD makes new models irrelevant. It's like saying, when in the flip phone era, well, you have to have multiple models of flip phones to sell a high volume, and then the iPhone comes out and sells in insane volumes. They basically see the Model Y, Model 3 with FSD as like an insane game changer for the vehicle market. And, it's like choosing a car versus choosing a horse. You're going to sell a lot more cars than horses. That's it. It's going to be the only self-driving car. So you have a choice between a non-self-driving car and a self-driving car. You're choosing between two completely different things. They're not the same thing anymore. The way I read that is that when you're thinking about a robotaxi world, the paradigm of needing all these different models becomes bizarre. You don't really care if you're just looking for a robotaxi ride from point A to point B. You don't care whether it's a Model Y, Model 3, Chevy Bolt, whatever. You just want to get from point A to point B. And you don't care that much about what the vehicle looks like or what its functionality is. Because 80% of road trips are getting from one person from point A to point B. Pierre Ferragu, who is now my favorite Wall Street analyst, asked a question about the 4680 form factor by suppliers and chemistry. They basically, Drew Baglino said that iron versus nickel, physics differences, different form factors. He said that there are other form factors potentially for lithium iron phosphate. It seemed very clear that there are no plans to do lithium iron phosphate in 4680. So there's this open question about how the lithium iron phosphate battery cells will be incorporated in Model 3s and Model Ys in the future as they scale production of lithium iron phosphate, as CATL and other suppliers scale production of lithium iron phosphate. Elon had this little, I would call it a rant, talking about what happened with the chip constraint, that there was a chip shortage, and so a lot of people just started panic buying chips, and he compared it to the toilet paper situation in 2020, when everybody was freaked out that toilet paper was in short supply, so people panic bought toilet paper, and that increased the supply problem for everyone else. It made it harder and harder to find toilet paper. And he said there wasn't an increase in ass wiping demand. It was just that people were panic buying toilet paper. And so the same thing, that a lot of people who were buying chips weren't really using them, didn't really have a need for the chips, and that just really shrank the market for chips, the supply for chips, and that made it harder. They see that easing this year and the problem going away next year. I think that Robotaxi 10x's Tesla's valuation. So you got $1,000 a share now. Robotaxi in the next, by 2023, if they're delivering Robotaxis in 2023, then Tesla stock goes to $10,000 a share in 2023. And then Tesla Bot could 10x again. The potential for Tesla Bot is just such a game changer that it can ultimately, as AI improves, as real-world AI improves, the ability of Tesla Bot to handle different tasks in different environments frees up a lot of human labor. It takes over a lot of human labor tasks right now where there's a short supply of humans to do that work. If you haven't noticed, there's a short supply of human labor. It's a huge problem in all kinds of industries. So Tesla Bot comes along and alleviates the labor constraint on the economy. That means the economy grows very rapidly. That's very good for everyone. It's also very good for Tesla shareholders because they sell a lot of bots and they're really high valuation. Because by my math, a Tesla bot should ultimately cost less than $10,000, maybe even less than $5,000, while generating $100,000 in value a year. So you build something for $5,000 that produces $100,000 a year in value for 10 years. It's a massive game changer for Tesla. The margins of that are insane, and that could 10x Tesla's valuation again. You can send Tesla bots to Mars. You can send Tesla bots to the moon. You can send 10 times as many bots as you can send humans. You don't have to provide oxygen for them. You just have to keep them a little warm. And when they get to the moon or Mars, they can do 10 times as much work as humans. And that makes the expansion of humanity to multiplanetary species makes that more viable as well, because they support the humans going to Mars and the moon. So check out the Tesla Air t-shirt at elonbits.com. Check out the stainless steel water bottles. There's the Elon one and there's the Tesla stock one. Please support this channel on the Locals platform, warrenredlick.locals.com. So please support this channel on Patreon. Links to all this in the description below. Please join the YouTube channels as a YouTube channel member, exclusive content level and higher in particular. It helps me grow this channel and do more innovative things on my channel. And as a supporter on Locals or on Patreon or as an exclusive content member on the YouTube channel, you get additional content. I might provide early access to some videos, and I might do some videos that only supporters will be able to see, particularly on the Locals platform, on the Daily Nye, warrenredlick.locals.com. Some videos I make will only appear there, particularly politically oriented videos that would lead to potential censorship by YouTube. I tend to do those behind the paywall only, just to be safe. If you don't want to hear my political views, then that's not an attraction to you. But if you want to think about things in the same way I think about this stuff, the way I think about other things, you don't have to agree with me, but hearing a different perspective may be useful, may be helpful to you. So please consider supporting me, particularly on the Daily Lie. Thank you so much for watching.